Don't look now, but we may have passed peak inventory for 2025. Inventory of unsold homes on the market is basically unchanged from a week ago. Last year at this time, inventory was rising quickly. The pace of new listings is running consistently below last year at this time now and staying at very low levels nationally. The data is looking very different from what so many people assume. Most casual observers in the housing market think that inventory is skyrocketing. So, this new data is important to track and to talk about. But as supply is firming up, it's also important to know that home price trends are softening. By at least one measure, national home price trends are just about to turn negative compared to last year at this time. And I'll share the price data in this video today. So, the two trends are probably related. Potential home sellers see light demand and weak pricing, and they're choosing not to add inventory to this market. Meanwhile, mortgage rates are at 10-month lows, and optimism is growing that the Fed will help rates fall further still. Mortgage rates are not yet low enough to really move the needle on demand or prices, but if rates happen to get lower, close to 6% from 6.6 where they are now, in my opinion, that would indeed spark some buyers. I'm Mike Simonsen. I'm the Chief Economist for Compass. In these videos, I look at the U.S. housing market every week. Our goal is to help everyone understand what's actually happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research as well as insights from what we see at Compass, the largest real estate brokerage in the country by sales volume. So let's dig into the data here for the week of August 18, 2025. Let's start today with inventory. There are 860,000 single-family homes unsold on the market now, nationally. That's up just 11 basis points from last week. A year ago, inventory rose 80 basis points in the same week. So inventory was rising a lot faster last year than it is now. We have a couple more weeks of potential for inventory to climb in August before the Labor Day holiday. Later in September, there's again some opportunity for inventory to grow, but the trends right now don't look like that's coming. In fact, inventory is now only 23% greater than a year ago. Very recently, there were 30% more homes on the market than in 2024, but that's down to 23% growth now. So still a lot more homes are unsold now, but the gap compared to last year is shrinking. In the years pre-pandemic, it would have been totally normal for inventory to peak in July or August and then decline for the second half of the year. But in recent years, as the market slowed, inventory kept rising all the way into October or November. So in 2025 now, the way inventory might resume rising in the fourth quarter is if mortgage rates jump again. If we get some bad inflation data, for example, rates would climb, and that would definitely chill this already chilly demand scenario. So in this chart, you can see the blue line from 2025 is at a plateau right now. The absolute peak of inventory was 2 weeks ago, and we have 4 weeks in a row of basically flat market. There are the same number of homes available now unsold as there were in mid-July. Inventory has reached this cap because there are fewer new listings each week and because withdrawals are elevated. The takeaway for the inventory data now is that for whatever reason, supply is not growing now. The primary message I read into this trend is that while prices are soft and maybe even heading lower, the most dire fears of prices crashing, those need growing inventory as an ingredient, and we don't have that. So as I mentioned, the weekly pace of new listings is running below last year at this time. This lack of sellers is one of the things contributing to the cap in overall inventory growth. There's simply fewer sellers each week. This week, there were 67,000 single-family homes newly listed for sale, plus 10,000 immediate sales that were listed and are already in contract. So all in all, that is 4.9% fewer sellers entering the market now than a year ago. nearly 5%. So when I share this data, people are often surprised. They'll say things like, not in Dallas, but yes, even in Dallas, there are fewer sellers now than last year at this time. Over the last few weeks, it's been true in Dallas and Miami and Denver. There are some cities like Phoenix, LA, or Boston where the new listings are trending lower, but they're still about the same level as last year. There are basically no cities in the U.S. where the new listings levels are climbing compared to last year. This is a pretty universal trend for home sellers across the country right now. And you can see the national trend here. The blue line is this year. These are unsold single-family new listings each week, 67,000 of those this week. The purple line is from last year. Early in 2025, there were plenty more sellers each week than the year prior. The blue line has been above the purple line all year, but that trend has now subsided. And you can see at the right end of that purple or the blue line. The potential home sellers this autumn already know that demand is light unless mortgage rates fall further. But what they might not know is that their competition is decreasing. So that's important to be attuned to. Is the cap in inventory at all related to improved demand? Are buyers motivated by slight improvement in mortgage rates in August? If so, it's probably only a very marginal amount. I've seen some anecdotes about it, but the weekly pending home sales pace did pick up for the week and came in just a tad above last year. There were 67,000 single-family home contracts started, plus 13,000 condos for a total of 80,000 sales that started in the most recent week. So that's a little positive news, but overall in the last few weeks, home sales have dipped back to 2024 levels. In this data that we're tracking, the homes that go into contract each week, the newly pending home sales. These are sales that will complete mostly in September or October. So for a couple of months, we measured the sales pace exceeding by just a few percent the same weeks in 2024. For August, we don't really see that growth anymore. So in this chart, the blue line now is just about the same level as last year's purple line. There's no real growth evident anymore. This tells me that the cap in inventory is on the seller side. So it's potential home sellers deciding not to list now and waiting for better conditions in the future. So does that mean the spring of 2026 will have a flood of sellers who are trying again? It could mean that. We could be deferring inventory from 25 into 26. So we'll keep watching that data closely to see if that materializes next year. So let's switch from transaction counts to home prices. I'm using price per square foot data today because I want to show you a trend that can be hard to notice elsewhere, but it is potentially very important. The median price per square foot in the U.S. for single-family homes is just over $218 per foot now. That's down 40 basis points for the week and is just 40 basis points above last year at this time. Price per square foot is a nice normalized measure for home prices. It has less week-to-week noise than some of the other measures of pricing and valuations. It's current, so it doesn't have like the multi-month lag time that most of the sales price headlines you'll see in the media. So the current data is pretty easy to visualize here. And so that's why I'm sharing the price per square foot data today. Seasonally, home prices peak in May and June and then decline for the second half of the year. And you can see that seasonal pattern here in the 3 years I'm showing in this chart. A slower than normal second half decline means that the year finishes with home price gains. A faster than normal seasonal decline implies that home prices would finish the year below 2024. And in the image here, you can see the blue line is indeed easing down faster than in recent years. If this pace continues, it looks like in September, home prices, by this measure of dollars per square foot, will be showing declines nationally compared to 2024. This condition has been true in a lot of local markets around the country, especially in the Sun Belt for a while. The northern and northeastern markets have been keeping the national home price levels in positive territory. The headlines are still saying things like, home prices are at record highs. And they are technically, because home prices are fractionally higher than where they were last year. And so they're still at their highest levels. The headlines have not captured this move yet. It seems like those headlines will be coming sometime soon, and we'll be ready for them. In other price data, the median price of the newly pending contracts that came in this week came in at $395,000, which is down 1% for the week and is unchanged from a year ago. The median price of the newly listed homes is $400,000, and that's unchanged from a year ago too. So basically, all of the current measures of home prices are flat from last year. And we'll see if they shift negative on any consistent basis. Home prices are definitely worth watching for the next few months. And in this price per square foot data, you can see the blue line is just about to reach under the purple line. Price reductions have plateaued recently around 42%. So that's up just 15 basis points for the week. There are more homes on the market now with price cuts from the original list price than in any August in over a decade. In this chart, the blue line is this year, and it's obviously elevated with plenty of home sellers reducing their asking price. The blue line has been relatively flat in recent weeks. If we get lucky and mortgage rates drop, that will spur demand and be visible in this price reductions number. Last September, when mortgage rates dropped, you can see the purple line here suddenly stop climbing. Conversely, if mortgage rates spike from here, for example, if inflation data comes in high, mortgage rates could go higher from here. And if that happens, you'll see just how fragile this market is. You'll see price reductions jump like they did in the 2022 in the fall. That's the orange line here for that jump. See, these are homes that are on the market now, and if mortgage rates jump, some offers don't come in over the weekend, and by Monday, some sellers are doing price reductions. So we see that inflection in the price reductions data almost immediately. So let's sum up for the week. You may not have noticed, but inventory does not seem to be climbing anymore. The number of homes on the market inched lower from highs in July. And that's because there are fewer sellers choosing to list each week right now. The new listings rate is down. And there are more withdrawals until conditions improve. Meanwhile, there are price pressures which continue to mount and which bear watching closely. All right, that's all the data we have time for today. We'll see you soon.